Hello, everyone. I'm Larry Mellon, Vertex Director of Tax, a part of our Chief Tax Office. We welcome you back to our episode and our new series, Larry Live Tax Talk for Tax Professionals. On each episode, we'll discuss tax topics that tax professionals should be aware of, include in their ongoing tax strategies, and to share the latest trends in the tax landscape. On today's episode, we're joined by Gunjan Tripathi, Vertex EMEA Director of Solutions Marketing. Gunjan will be sharing with us sales and use tax terms that conceptually are similar for Europe and North America. However, language translations could open the door of tax differences. Welcome, Gunjan.
Hello, Larry. Thanks for having me. I guess we can dive into this straight away, but a very quick
Great.
intro. My past life is more from a European VAT perspective, and that's where also I'm physically located. So we'll keep translating each other, I guess, throughout this episode.
Yes, we will. Thank you. Appreciate you joining us. So, Gunjan, our first area we want to cover today is around how we can demystify the specific meaning and operational differences of global VAT terms. What are some of the tax terms that seem conceptually similar, however, have different meanings in Europe and North America?
So I think both sales and use tax in North America and value added tax in Europe are ultimately forms of indirect taxes. So they are hidden, i.e., they are usually paid by a consumer in their full price before they take away a piece of goods or services for their possession. But let me start with even the whole concept of value added tax, which in one way that it's very dissimilar to sales and use tax is that unlike sales and use tax, that's typically only chargeable at the very end of a supply chain.
Right.
VAT instead applies to every level of a supply chain. So if I'm a business, I will buy raw materials, I would pay VAT on it. Then when I sell it onwards, after I have increased its value, for example, or transformed it, I will charge my customers, whether it be business or end consumer customers, the price and additional VAT. Now, in this concept, when I have incurred VAT, we will call it input VAT, and when I have charged it onwards, that's output VAT. So in some ways, there could be differences, yet similarities to get yourself started around the difference between sales tax, which is similar to output VAT, and use tax, similar to input VAT. Does that make sense?
Yeah, that's great, and I think that that's important that, just that brief, update on what the difference is between that value added tax and how people are, majority of the people that have listed on here on the sales and use tax side look at that stuff. So it's great to talk about that. So let's shift gears a little bit, and we're going to pivot on how tax terms should be viewing the differences between value added tax and sales and use tax.
The other terms that are quite different are around the net tax that is payable to the authorities or is refunded. So we often talk about the net of output and input from a tax-paying business's perspective. And that could be interesting as it could differ a lot operationally when it comes to North America counterparts of whether sales tax is payable or use tax is available for refund or whether they are netted or not.
Yeah, I think just real quick, I think a lot of that, goes into like, it's completely different for those that are specifically or 100% US based, basically talking about how things potentially are zero rated. And in the US, they would look at that and be, well, it's zero rated, it's zero tax. And it means something different in the value added tax world that something is zero rated versus exempt or a zero. So all those things kind of play into there. So I think that maybe just talking a little bit about that may be helpful for those that are on this session.
Sure. So let me put it this way. A 0% VAT rate is still considered a positive rate of
Right.
VAT, and it is considered within the scope of tax, which means I, as a business who's selling zero-rated goods or services, will not charge my customers any VAT in addition to my price. But this zero rating enables me as a business to get refund still on any of the VAT that I may have incurred in course of my business. So ultimately, if I was a business just selling zero rated goods or services, I will typically be in a refund position when it comes to my VAT returns. And that's different from exempt. Exempt almost pushes it into the boundaries of out of scope, or exempt actually takes away my ability as a business of my input tax credit. So exempt actually hurts my business more because I am supposed to absorb the costs of VAT that I
Right.
have incurred.
Right. Yeah, that's interesting. And we look at we talk about the whole reverse charge thing, and I think that, to put that in the North America terms, it's more about the like the use tax side. Like you're having a potential vendor who's providing goods and services to you and not assessing any type of a sales tax where you go back on the use tax side. Similar reverse charge kind of plays the same way, correct?
Now, reverse charge is another extension of how zero rate comes into play. Zero rate is usually language used when the goods or services are being exchanged within a domestic territory, because again, VAT is applied at a federal
Right.
rate across the countries that use it. And then zero rate kicks in when two European countries are having intra-Europe trade.
Right.
So the one charging says, similar to exemption certificates, I won't charge you, but I know I'm selling, and had I sold it locally, I would have charged you.
Right.
But I'm passing over the responsibility of charging it to yourself and declaring it on your local returns over to you, the buyer. And then again, only if it's a business buyer, this applies. If this was
Sounds like
an
there's a
end
lot there.
consumer, we again complicate the rules further just because we want to.
Yeah, there is a lot with that. And like, for someone who is in a business where they are doing things that are both in a global, you're certainly understanding those things. If there are people who are, generally basically on a US sales and use tax side, understanding that can be great. And that's why we wanted to kind of have this discussion, was just to kind of give some people an opportunity to hear about this and learn some of those differences, and maybe for future we go a little deeper in later. But I did want to just talk about we Wayfair in North America and some of the EU commerce rules that have been introduced in 2021, and they continue to expand. We know that digital age is something's under. So, do you have any comments on some of the things that have happened recently in the EU e-commerce space?
Yes, so since 2021 specifically, I would say the new rules in EU are very similar to how Wayfair expands the nexus or the requirement for a seller selling outside their state to still charge local taxes. So a very similar thing happens in the EU where they say if you are a business, you'll have one registration in any one of these countries, but every time you sell in a different country to different consumers, you have to account for local VAT as per the local federal taxes, because although you're selling cross-border, reverse charge is not what is going to apply. So this is specific more to business to end consumer type of sales as well, I should add.
Great. That's good. So, just want to kind of have a question here. So, what do you think are the leading challenges facing businesses and individual tax professionals around VAT and sales and use across regions around the world?
Um, I would say the top area of complexity comes from the fact, as we were also discussing earlier, that the interpretation of core concepts are different in different countries. There is lack of harmonization, or I would rather say standardization,
Yeah.
around how these are um, applied across the operational environment of a tax authority in a given jurisdiction, which means as a tax professional who's supporting a multinational business, or as a business who's trying to grow beyond its domestic markets, it suddenly needs to have a very steep learning curve of multiple countries. And then you
Yeah.
have to understand similarity, but as well as differences, because otherwise there will be the pitfalls. And Not knowing enough about tax is never a reasonable excuse for being non-compliant.
Right. So I know that we talked about businesses and new things, and I know the big thing that one of the things we're talking about is e-invoicing, and you and I have talked offline about this, about compliance being to deter fraud, evasion, stuff like that. What do you have any comments on that, on how that's going and how that's affecting businesses?
In the short to medium term, I would say the cost of compliance for businesses is going up because, again, due to lack of standardization and harmonization across various countries, while things settle down, we currently still have a lot of uncertainty amongst regulations, amongst different start and stop times of different authorities in the EU, which ultimately means cost of compliance is going
Right.
to be higher than anticipated in the short to medium future. The
Right.
hope is it would move towards a standard and stable model, which then authorities as well as taxpayers can take a more operationally optimized process view around.
Great. Yeah, and I like that, you had used in the last session, you used about standardization, which I like, and building on that, it's not always the norm, especially on the US side. State and local jurisdictions, they often have different views about tax determinations. It's true some businesses don't move forward based on fear of taxations. We know a lot of people who establish businesses don't often look at that. So they're often concerned about setting it up and have they charge the right tax depending on the size of that business, right? But there's still a drive to own their own business and be successful. So, anyone who works in the tax field today is, very aware of the tax landscape, and it changes daily, monthly, and specifically trying to keep track of that. And anybody in that business certainly knows that since Wayfair in 2018 has kind of changed how businesses operate. So with your comment, about tax compliance, we talked about the evasion. You know, some see the U.S. as two areas. One being a way to validate and ensure businesses, right, as well as reporting and remitting it, accurately and timely, right? So we know that with some of this stuff, they're getting their maybe the obligation is being paid sooner. Some don't have a chance to validate and look through that, but it's simply just a way for jurisdictions to bring in revenue to governments. It's validating it and getting those funds in there better. So that's great. So we started a conversation. We started focusing on these tax term differences. Right now, I want to focus on how these tax professionals can better bridge this gap of compliance, right? So do you have any insights that you could start with to kind of share how we can bridge these gaps and facilitate compliance?
So, for tax professionals, the one thing I've always said and learned it throughout my career in tax as well is we may not know everything about regulations. We may not be the master of what's going on within the tax authorities, and we learn it and we embrace it and react as it comes. But the one thing we can definitely spend time looking at is our own organization's business models, its
Right.
reach, how it's operating, and knowing where and how the data exists and where are the weaknesses in the data and its hygiene. Because having that awareness of where my business is strong on data and where can I strengthen with data management activities will make you feel much more prepared for all of these upcoming mandates, because ultimately everything is headed towards technologically enabled capabilities that are increasing the rate of compliance and are increasing the amount of information that needs to go across from taxpayers to tax authorities to back up their, whether it be tax refunds or tax payments. So I think that would be the best starting
Yeah.
point to look at it.
Yeah, I think I agree with that. I think that as we go through that and we validate that, I mean, whether we look at cross border, we look, from different businesses and countries on how they do things, a lot of that does, come into a factor. We do play on that to see where those differences are. And we know that businesses look at things differently. So I think that, by sharing some of that information by a business understanding what's happening globally, as well as what's happening both for the US side, and understanding how the two of those related, are definitely something that businesses have to keep an eye on and be aware of.
Absolutely.
So that's great. So
Uh,
yeah, yes, please.
and then the last thing is in terms of any future projects, they're never the cross to be borne ultimately by just the tax team. So make friends across organization, in your finance team, in your
Yeah.
IT teams, because they have a lot of the information that you're going to need very soon.
Yeah, we often talk about that and say that, as much as, anybody who's on here who's in the tax world knows that usually tax finds out about something after the fact, after something has been done. And we always talk about how do we get, we've done other series, we talked about how do we get tax people to the table, because anything that's happening in a business, has a tax consequence, whether it be taxable or non-taxable. It still has a consequence, and it's up to you to get yourself to that table. So I just wanted to kind of recap on some of the things that we had today. Looking, I don't want to keep this going, but it was great to be able to talk about some differences between North America and European. I think it let some of our listeners look at that to understand some of those differences between VAT and sales and use tax. I don't think we really went into deep uh, dove deep into those. But I think we kind of just talked about some of the language and stuff that was on there, which I think was great, Gunjan, to kind of look at that stuff. So, translating tax concepts, across the pond can be seen as an opportunity and growth. So I think that anyone who, has a global presence, it's an opportunity for anybody who's understanding the sales and use tax side to understand what's happening in the VAT world, and vice versa. Those people are operating should certainly see what's happening, and it's only beneficial for you, the tax professional, to understand what's happening in the world versus potentially being siloed in the area that you're in. So we covered a lot today in tax terms. I hope the viewers can take some of this information we discussed today and can start to apply it to their strategies, right? We gave a few things. We could probably follow up with some more. I want to thank those, people who, submitted some questions in that help us develop what we had talked about today, um, and do our best with anything like that. So that's pretty much all the time that we have today. Gunjan, did you have any remaining comments before we finish up?
It was insightful, and even I learn every time I speak to you, Larry. So thank you very much for having me.
I appreciate it. It's great to have you on here too, Gunjan. The insights and stuff that you have, what's happening where I don't have as much of experience outside of the US. It's great to always align with you and appreciate you joining us today. For all the users on here, it's great to have you again. Appreciate you being here with us. Looking forward to having you on another episode of Larry Live Tax Talks for Tax Professionals. We'll see you soon.